Hello and welcome to the 10th episode of the D91 Labs Idea Series. Through this series, we intend to highlight the diverse range of ideas and innovations that aim to move the needle on fintech innovation and financial inclusion, as well as inspire the industry to build and serve the financially and digitally underserved people of India. I am Vineet Kurian, Senior Research Fellow at D91 Labs, and I will be hosting the discussion today. Today, we have with us Neha Juneja, the co-founder and CEO of India P2P, a technology platform that unlocks capital for India's most credible borrowers. Neha is a two-time entrepreneur, having previously co-founded and scaled Greenway, India's largest clean cooking enterprise with operations across rural India and sub-Saharan Africa, where she developed multiple credit partnerships focused on women as borrowers. India P2P is a platform that unlocks new capital supply for India's best asset class, that is, rural women borrowers, by enabling investors, both retail and institutional, to invest directly in this segment. The platform creates de-risked, diversified debt investment products manufactured from loans that are sourced directly from vetted borrowers. They bypass traditional intermediaries to deliver higher returns on debt. Through this interview, we will discuss some of these aspects of leveraging technology to address the credit gap among underserved cohorts of Bharat. Thank you so much for joining us today, Neha.
Thank you for having me today, Vineet. Thank you.
Great. So let's dive straight into it then. I've been really inspired reading more and more about your ventures, both with innovations in affordable, clean cooking stoves and now with enabling growth for women business owners. Can you tell us about your transition from the renewable energy product journey at Greenway to what motivated you to go headfirst into the interesting yet often misunderstood microfinance business?
Yes, Vineet, thank you for that. I spent 12 years at Greenway, which is a clean cook stoves enterprise that makes efficient cook stoves replacing traditional matti ka chulas. You will be surprised that almost half the world, even today, cooks on a matti ka chula, even though it's one of the most archaic ways to cook. And because we were running a clean cooking business, we ended up pretty much exclusively working with rural women. It was a rural product and not enough men cook, especially in rural areas. So kind of rural women became our target audience. And while being on this journey of converting mud stove users to better stove users, we ended up working quite a bit with microfinance operators, given that microfinance is 99% women borrowers. It was a great channel for us to introduce this product and ended up learning quite a bit about microfinance. A lot of the problems that we have, whether it's lack of access to education or clean cooking or otherwise, are rooted in poverty, which is a tricky problem to solve. And microfinance, with its complexity and otherwise, is a great tool which has actually moved millions and millions of individuals and households across the world out of poverty, whether it's India, Southeast Asia, South Asia, Africa, Latin America, South America as well. Just the same format of microfinance, which is women vouching for each other, just has a certain kind of economic strength and great power to it. And we saw a lot of that at Greenway and just, could not shake this off our minds that more needs to be done here. It's such an impactful and such a great way for countries altogether to progress further. And not just, it's way more than the impact is way more than just removing the credit gap or gender gap. It's how India will become wealthy.
Absolutely. So can you tell us a little bit about the story of India P2P, particularly about how India P2P combines two distinct business formats of providing meaningful credit to underserved categories, as well as leveraging the recent interest everyone has in P2P lending as an investment option. So what were the problem statements you wanted to solve and how did this idea come about?
So Vineet, over the last 10, 12 years, I also had the luxury of having kind of a very frontline view to what was happening in microfinance, whether it was, different parts of the world or thereabouts. And over the years, microfinance started as an unregulated NGO type experiment, which then subsequently became very commercial for a little bit, which is when we had the Andhra crisis. And subsequently, it's been a very well-regulated sector. In fact, the RBI regulations in microfinance are copied worldwide. Over the years, we've seen that the segment has become some 130 million borrowers, which is close to a third of all of India's households. It's huge. It is close to 70-80 billion dollars worth of loans given out. And if you look at last 10 years worth of data, the yield generated or the borrower financing cost payouts are about 24-25%, with default rates under 2%. This also has to be seen in the context of your, some secured loan rates like loan against property rates, etc. Default rates are higher. Corporate default rates are 10-11%. If there was a way for all of us to earn 16-17% returns or higher returns, we would just stop doing venture capital and this and that and everything and just do this. And that is exactly what India P2P aims to do. One is, of course, to enable private investors to access this kind of established credible asset class directly, and also using technology as a layer in between to de-risk to the extent possible. And I want to add that the beauty of technology here is your returns, high returns on debt are not coming by chasing high risk investors. They're actually coming by lending to the lowest risk, high risk borrowers. I'm sorry about that. They're actually coming by lending to the lowest risk borrowers, which is what makes this model so appealing. And that's something that we're seeing as well.
It's a very fascinating model, and a very important aspect that I saw while going through some of the material that you have on your website was the disintermediation of the process by which investor capital reaches the last mile. So can you elaborate a little bit on this aspect and how the India P2P model solves this more efficiently?
So, Vineet, if you look at the whole of the microfinance industry is based on the concept of social underwriting, which in its truest form is the Grameen Bank model started in Bangladesh. The social underwriting model is basically, and this is and all microfinance borrowers have a CIBIL score. So it's not like it's only social underwriting, it's actually hard credit bureau data also that's available today, which also makes underwriting the borrower safer, better today. But fundamentally, how it works is, and I'm saying that to kind of come to the problem of disintermediation and intermediaries, that a group of women get together to form a self-help group or a joint liability group. Let's say if you and I were members of the same group, I took a loan and was unable to repay, you become responsible. You will not get a fresh loan in the very least until and unless I fully pay out my loan. And further, such groups are organized as centers, which necessarily have to meet once a month. And if a group goes rogue or members of a group decide that, okay, one of or all of their members will not repay, nobody in the center gets a fresh disbursement, and further centers as federations. So there is a lot of peer pressure plus trust, which is created, by just getting women together. Sometimes you have some men as well, but by and large, women. And it's a great support system. Now, the creation and management of these social structures is typically done by locally present NBFCs who have a branch network, who have agents, who have loan officers, who will go and attend these meetings. Every time you take a loan, they will announce the loan to your group members and take that consent. And so the industry in itself is very fragmented by these localized, operated, kind of run by these localized smaller NBFCs. However, most smaller NBFCs, and this is true for the entire Indian economy, most smaller NBFCs rely on larger NBFCs to raise capital. Right. To lend further, you need money, and that money is typically coming from wholesale NBFCs or larger NBFCs, which end up charging a 6 to 7% NIMS, which is roughly 20-30% of what the borrower is paying in terms of interest cost. And the value they're providing is taking capital from from private investors, whether retail or institutional, and just giving it to smaller NBFCs on the other side. We don't need to charge a 6 to 7% spread. We are able to kind of move capital and make the capital value chain more efficient by 20-30% in total by just doing the same job that a wholesale NBFC does at a much, much, much lower cost. And this is a kind of an economy-wide problem. If you look at RBI's data, there are about 9,500 licensed NBFCs in India. Some of them may be a little bit dormant, but they have active licenses nonetheless, of which less than 100 are rated A and above. And to kind of capture large banking lines or bonds or NCDs, this rating becomes paramount. So essentially, the funnel at the top, or whichever way we want to see it, it's like a pyramid, and it's whoever is the top of the pyramid kind of accesses most of the capital. But they don't interact with retail borrowers. They don't bring in underwriting value necessarily and thereabouts. And our whole premise is that can be disintermediate with tech, and the benefit of that yield which is unlocked goes to investors and in some part to borrowers as well.
So, India P2P highlights women owned small businesses, particularly as India's most successful asset class. We often see very well meaning startups that begin with the aim of building a business that caters to Bharat and often run into difficulties in terms of not being able to service them sustainably. How do you perceive this notion, and what makes you really bullish about women owned businesses in semi urban and rural parts of the country?
What makes me very, very bullish is that if you look at all types of lenders in the Indian economy, the ones who have had the most success are microfinance lenders. They're the ones who've gone out and done the most number of successful IPOs, most number of successful commercial exits. And 10 of them have become banks, which is saying something, which is it's not easy to become a bank in India. That has happened. The challenge we have is a big perception challenge. You will maybe some viewers will have a hard time believing this, but every second or third day we get a call from one of the investors who've invested on India P2P after they've seen their list of where their money has gone. So when you invest on India P2P, your money is diversified and you get a list of all the borrowers with some more details about them. And they just call us and ask us that how are you finding so many women business owners? It's a country of 1.4 billion people. I can't find 20, 30,000 women business owners, but people have this general perception that sometimes women are not actually earning money. It's the husband who's taking a loan in the wife's name or thereabouts, which is untrue. I've repeated this before, but I really blame Saas Bahu serials for it, which feed it into us that women are at home fighting with their sister-in-law, mother-in-law. That is not true. Especially rural women are almost always engaged in an income generating activity because enhancing the family's income is paramount. There is no bigger problem than the problem of increasing income. And women, adult, young girls, boys, everybody is just involved in some income generating activity. That perception is not easy to change. We are up against the Saas Bahu TV shows, and that's kind of a giant to fight, but we're doing it.
You've fed into my next question, which was it's one thing to understand the potential of servicing this cohort and a completely different proposition, for a lack of a better word, to sell this story to potential investors for the business, right? Are there ways that you've gone about this that you would like to share with people who are working with similar cohorts but finding it very difficult to get investors to come on board?
So Vineet, you will see that people will see on our website, and otherwise there is very little mention of women borrowers. There is a mention, of course, because what we highlight is the fact is the level of returns you can earn, and that's our selling point. And once people kind of experience the returns, then we kind of bring it to the forefront that yes, this is to women borrowers, and which is why you're earning high returns. But I've run an impact business before, and this is something I say with some experience. If India P2P was to market its product as an impactful investment, people will probably allocate 10% of their allocatable capital, whatever. But since we sell it, we market it, and rightly so, as a product that can actually get you better returns than most other things out there, is why people end up allocating bulk of their available capital. And that's the area we want to play in. Because this asset class, women business owners are actually India's best capital growers. And we are kind of having to set a performance-led example, because otherwise, we kind of still fight that perception bias.
Absolutely. And how has it been working with the regulatory authorities in what is relatively a new and evolving space in India, which is like P2P lending? And also, what are some of the risks that your business faces?
So the risk, in terms of regulations, this is a very well-regulated space. It's a very granularly and firmly regulated space, and we're happy about that because we are managing very precious capital. Retail investor capital is super, super precious, and it's good to have regulatory oversight, and for investors also to know that yes, there is very clear regulatory oversight. We have, compared to we also, as a fintech, we worry about changes in regulation. Fortunately, there have not been a lot of changes in peer-to-peer lending regulation. So the stability has been good for us. And so the risk that our business faces, the biggest risk is just having more defaults on the platform, which will kind of crumble investor interest and inflows, which is why the primary risks of the business are the risks of the microfinance segment. And we do multiple things to kind of counter those as well. Like one of the biggest risks in microfinance, which I would like investors on the platform also to be cognizant of, is geographical concentration. These are predominantly semi-urban rural portfolios. And let's say we had an event in Himachal recently where flash floods, kind of created such havoc. If that kind of a scenario, that kind of an event is to happen in a place where India P2P borrowers are present, you cannot go and ask those borrowers to repay. I mean, it would be obviously very difficult to collect, and it would be also wrong to collect in those kinds of timings. So, which is why for all investors on the platform, we deliberately diversify across multiple geographies and thereabouts. And this is a high yielding, but the investment comes with some risk. So if there's a macroeconomic event like COVID or even demon, then investors who have invested on India P2P would see the returns being affected. It won't happen that everything is hunky dory even in these kinds of scenarios. So local events do happen, and every 5-6 years there are generally events that cause some impact on the portfolio, which is where diversification within India P2P and for investors generally to diversify is always a good idea.
Now, I must congratulate you on completing your first year in operations. And so, what are some of the key learnings that you've had from this experience? And how do you envision India P2P scaling up and expanding over the next few years?
So, Vineet, we want to be the best. Like, there are very few high yielding regulated debt investment products in India. We want to create an example of, being larger than at least a large debt mutual fund out there, and setting an example of unlocking more capital for the borrower segment on the other side, but just encouraging more Indian investors, retail investors to invest in debt. On the borrower side, we've had a smooth journey. There has been no those sort of events that I mentioned. Fortunately, none of them have happened in year one of our journey, and hopefully not in the future as well. We never imagined any hiccups on the borrower side because as a team, we come with experience there, and it's the whole microfinance sector is based on such heavy standardization that you follow the same practices and you kind of end up getting the same result. So it's not been much of a hiccup there, but we have learned a lot about how to convince investors. First, tell them about the returns, and then, oh, by the way, the returns come by lending to rural women, and then somehow people connect and thereabouts. And we just want to keep scaling going forward. We are well diversified already. We operate in 75 districts now, and in another year, you'll see India P2P in 200 plus districts, which is where our borrowers come from. So even finer diversification.
Yeah, that is amazing. And I think that's a great note to bring this episode of the Idea Series to an end. Thank you so much for sharing your insights with us, Neha. That's quite an interesting model that you've built with India P2P. And we wish you and your team all the best for your future plans. It was great chatting with you.
Thank you. Thank you for having me. Okay.
To all our viewers, you can now listen to this conversation on our D91 Labs podcast on Spotify, Google, and Substack. So please go ahead and subscribe, and you'll hear from us soon.